Hello, everyone! Welcome back to another exciting episode of As the Stomach Churns. Dun, dun, dun. No, wait a minute. This is what is this? This is the Daily Brief. Woohoo! Party! Da-na-na-na-na-na-na-na-na-na. Happy Easter. What is it? It's Good Friday. TGIF, I suppose. Because it's a holiday. I actually gave myself permission to sleep in today. I'm not overly excited. I mean, we did have a big U.S. jobs report come out. Interesting that it came out on Friday because probably not, by the time Monday, Tuesday rolls around, it'll be interesting to see whether we're off talking about other things in the market. But as you can see, interestingly enough, the only market that I saw trading here this morning, but it looks like it's finished now, is this Russian exchange. Actually, I'm a bit surprised that actually it's doing relatively well. And if you read the rants, that's not the right word, but the sort of write-ups that actually the Russians are feeling kind of optimistic. And it's kind of ironic that we had that big buy signal in the stock market last fall. Here in North America, and you can see that basically that was the same signal over there as well. So it just goes to show world equity all moves up together regardless of whether they're fighting with each other or not. So it's kind of an interesting sort of side. But as you can see, nothing's moving here because it's basically the world's in holiday mode. Chris will attest to the fact that do the Europeans take this whole Easter holiday relatively seriously? Chris, what do you think?
Super seriously. From around 7 p.m. to about maybe 2 a.m. in the morning last night, they were celebrating, let's call it, with their traditions and pointy hats.
Pointy hats. All right. All right. So anyway, the point of the matter here, people are very wrapped up in baby Jesus's death day. And I suppose actually it's interesting today as a special treat. We have a second go round because all of you loved him so much the last Friday. We've got Grim on the call again today to sort of dovetail what he was talking about last time he was with us. Grim, how you doing this morning? Are you with us here? I think he's with us in the free show here.
Yeah, I'm here.
There he is.
Doing pretty well.
Awesome.
I hope everybody's having a good beginning of their weekend here.
All right, and I think Grim follows more like the Norse. Is that the correct expression, Norse? I don't know whether that's the right sort of.
Well, Norse kind of covers a lot of the Northern European kind of conglomeration of things, but
I know you're a big fan of Thor, right?
yeah, well, also true in general. Yeah, that's the part of why I got the name Grim. Actually, Grim's a was a nickname, is now my legal name, but
You
uh,
actually changed your legal name to Grim.
yeah, well, my wife and I both we were kind of waiting. I don't get along well with my father's side of the family, and outside of my father. And when he passed away, we decided to change our last name too. So when we did our last names, we also changed our first names to our respective nicknames that we've had for years as well. So
Oh, wow. Well, anyway, I was asking Grim about sort of mythology. I don't know whether it's religion or not, but I think around the world, everybody sort of celebrates the coming of spring. Finally,
mm,
oh, the winter's finally abating.
yeah.
Um,
There's a holiday tradition called a star that's actually so the when the Catholic Church was kind of expanding and doing its thing, as it came to each community, each area, and they had some kind of local holiday celebration, they generally kind of engulfed those, right? And so
mm,
um, Easter gets its name largely from Ostara, which is the um, kind of Germanic, Northern European um, traditional celebration of spring. So,
yeah. So, wherever you are in the world, hope you're enjoying that. I suppose if you're in the southern hemisphere, it's the start of winter. But us up here in the northern hemisphere, we're all breathing a sigh of relief. Huh? Hopefully, warmer days are ahead. And of course, if you are a Christian, like I said, happy Jesus Death Day to you all. And if you're in Europe and on the island of Mallorca, don't bang your drums and toot your trumpets outside of Chris's window at 2 o'clock in the morning. That's not nice. Anyway, holiday environment. As I said, I actually gave myself a little permission to take it easy today. Haven't done a ton of prep work, but nonetheless, here were the econs that have come out here today, and obviously we had a pretty big jobs number there for the United States come out bright and early, very, very early this morning. Interesting, basically in line with expectations. I wouldn't say it's a big miss or a big beat. I mean, 236 was the number, and the market was looking between 239 and 250, so slightly under. The only thing that I would take away from this, and everybody should understand this, is you should never ever trade off of these non-farm payroll numbers. They are highly, highly suspect to revisions in the months ahead. They're very, very political. So as a result, if you have like elections that are looming and stuff, these numbers often get very finessed to sort of, help the incumbent, that kind of thing. But on balance, I think we're heading in basically the direction the Fed wants things. I mean, the inflation, they let things get out of control there. I think half of the issue there, of course, was around the sickness, and nobody really understood how bad the sickness was going to be. And so they kind of had a loosey-goosey attitude, just might as well throw more money at it than not enough, and see the whole sort of Fakasi collapse, House of Cards collapse. At least they're keeping the game going. So now we're on the other side of the sickness, and they're trying to rein things in. That's probably the way that I'm interpreting this. I guess the point that I would just make is it's kind of hard to see in these data sets now. Well, actually, I already had this up, but what letter of the alphabet does that kind of look like? And it's interesting. 239 was a key low there in the data reported, and here we came in at 236. So as we sort of had intonated, the Fed's been talking lots and lots and lots about we want to try and control the labor market, bring it into line, post-COVID, all that, bring wage growth and all that into line. I would show you a longer term image, but unfortunately, I just can't really get anything here with this insane COVID data set here. So. But hopefully you can see that M top. Actually, we might even be able to get this on TradingView. And really, this is what the Fed wants to see, and it's very difficult to slow this train down. So on balance, I think the Fed's getting what it wants. And of course, this is if you see an M in like non-farm payrolls and like job growth. Obviously, that's deflationary, not inflationary. So the very first thing that we saw following that release was, actually, it's interesting. The bond market was perking up here. I did see in the lounge.
Ooh, if you go to US NFP, that's the US non-farm payroll on TradingView.
All right, so here comes Graham.
Though it will only show you a monthly duration, but you can zoom in then and cut off that COVID stuff.
Okay, thank you, sir. Actually, gee whiz, look at that little Filecoin. I was just telling you, Chris, right before we got going, I wanted to go and buy some of that. Jesus, there it goes. All right, so thank you, Grim, telling us a little bit about how we can finesse TradingView data sets. Here, let's go. That damn Filecoin's gonna take off on me while I'm doing this video. I should be buying it. So you said USNFP, something along those lines. United States non-farm payrolls. There we go. What do we got here? I guess
it only goes on monthlies. But if you drag that to the left, so that the COVID stuff falls off the screen, then we get to see it.
So there you go. Actually, that's interesting. That looks quite a bit different than that image that the other site was giving us. I guess, there are your M's. This, actually, maybe this hasn't updated with the current data. Maybe it'll update Monday or something. What did we have that last month at? This was 326. And TradingView has 311. So it doesn't look like the left arm's talking to the right arm. Anyway, the point being that this is kind of the direction the Fed wants this employment picture to go. And so I think they're getting what they want. I had a really, really good time last night. If you, it all depends on what turns your crank, I suppose. But after I came back from Lille, I took a trip down History Lane with Mr. Jim Grant of Grant's Interest Rate Observer fame. I used to be a regular on good old Louis Rukeyser's show. It's fascinating how listening to him. This was a really, really good. It was sort of like a promo for a book that he just recently wrote on it's I can't remember the guy's name off the top of my head, but anyway, the point of the matter is Grant was a big fan of hard money and actually understanding the way the banking system works. So if you want kind of a fun side assignment, you can see I have it in the Twitter feed here, but I'll even throw it in the lounge. This was about an hour and a half. Fairly thick, so if you don't understand banking, you better, maybe take a little bit slow. I'll put it in the lounge there. Oh, maybe you can see it, maybe you can't. I don't know. It's a Facebook post, one of these things, but you can look at it on the Twitter feed. Really interesting conversation with this gentleman, Jim Grant, and he wrote a book on banking back in the 19th century. And I even pointed out that it's remarkable how there was basically banking crises all in the 1860s, and it's basically exactly the same thing as we're going through today. And he even made reference to the fact that Burke, who's a very famous economist, was making reference to France's debt bubble, and it basically doing exactly the same thing that we see happening today back in the 1780s. And I've often made the argument that, and actually I was even on YouTube, commenting on YouTube, social media influencers and all that kind of stuff over there. They were doing videos. There's one gentleman, I can't remember what the name of his podcast is. Oh geez, I don't know where it is. Anyway, he was, it's this guy here, but this is a different interview. But this gentleman here, what's
Meanwhile, there are
forward? What was
a lot
that?
of
Forward
property
guidance. I
developers,
think
real
that's
estate like
the
myself,
name of his
in
podcast.
the mathematics
This
of,
gentleman right
of a
here.
deal structure.
He does some fantastic interviews. Anyway, he had an interview recently with an economist, and I even tweeted out and commented, and I even went on the post and said, what you're seeing in the banking world and the whole debt crisis and this, Klaus's great reset and the whole damn thing. I don't know where the hell it went. Anyway, there's nothing new to all of this. It's just basically history repeating itself. So, there's a very dry, you can see economists in the 1840s. It's not going to get you, well, anyway, it's banker talk, but it was really, really good interview. So I highly encourage you, if you have some free time on this holiday session, to maybe go and listen to Jim. On top of the fact that he does a presentation, he also does a nice Q&A session with the audience, and they had some very, very good questions for him, all about sort of the banking system and, hard money versus soft money and the role of the Fed and central bankers. And it's incredible. You only learn this from people who actually really have actually gone and studied this. And James has a long, long history of studying interest rates. He said for fun, back in the 1970s, he used to go into like the Smithsonian and go and read like copies of The Economist. It's The Economist magazine. The gentleman who was the chief editor of that magazine, that's his hero, and that's sort of the focus of his book. And I mean that's where how he got his kicks back in the 1970s, and you can't even get access to those old publications anymore. So anyway, sort of an aside. But just if you ever think that, this time it's different, we're in a very unique situation, that we've never been through this before. There's the guy's book right there, and the Bagfoot Fraught, Bagnut. I can't even read what that says. Anyway, it's all the same. Nothing's changed here. Nothing's changed at all. It's quite remarkable, really. It's a really, really good history lesson, and it just goes to show that we get all wrapped up in how self-important and stuff we are in this current sort of modern age, and yet he even consistently commenting says this is ridiculous. We just haven't learned any of the lessons from history because we just keep going through exactly the same thing over and over and over. Anyway, there's sort of an aside comment here for your Easter holiday. As for the market itself, we're supposed to buy when it snows, sell when it goes kind of idea. We had our last pivot to the upside there, end of February, which kind of makes sense because usually we get like the January effect. So the whole market gets lifted into the new year. And you really saw that, of course, in crypto. And then we take a bit of a pause at the end of January and sort of calm down. And you can see the market put in a nice pivot here. End of February, beginning of March. Now we're rallying into April. And the cliche goes, sell in May and walk away. So my hunch is we're going to work up and form some sort of top up here into the mid to late spring. I'm already starting to hear people talk about getting short positions ready, getting puts ready. In fact, actually, there's one gentleman on the website recently, relatively newcomer to the site, Effie, who's been doing some great presentations with Julian on Thursdays, and he's already starting to get short spread trades rocking and rolling. So it doesn't surprise me. It's very typical this time of year that we should probably be thinking about, okay, we're getting near the end of this seasonal move. So now maybe we need to start preparing for a little bit of consolidation. I suppose if we look at the price charts themselves, they kind of agree with that. So on a daily basis, of course, I pop in and very first thing I do in the morning is my 4-hour levels on things like the U.S. stock market, the ES. You can see the reaction they had from the jobs number this morning, and then literally as soon as retail is supposed to open, they called it a day. But anyway, that was the reaction from that jobs number. Fairly attractive number. Certainly didn't miss, and it wasn't like shocking. If anything, I'd almost get the impression that the market would prefer that the U.S. Markets stay relatively strong, which means that the Fed has to keep the sort of foot on the gas pedal. I don't know if that's the right term. Foot on the brakes? I don't know. Anyway, keep interest rates relatively high. Just keep in mind that higher short-term interest rates is actually, in a weird sort of way, that's a good commentary on the market. They would not have interest rates high unless the market could actually afford the high cost of money. I.e., there's enough economic activity, there's enough velocity, there's enough money actually sloshing around the system to justify the high rates. And if there isn't, then the whole damn market starts falling apart. And then, of course, the Fed comes panicking out and dumps rates down as low as they can to save things. I also heard, and I don't know whether it was from James Grant, but it might have been, but I also heard a really good debate about the yield curve manipulation that's going on right now. So we have been recently sort of scratching our heads when we talk about, because one sort of major sort of warning sign of economies is when the yield curve starts to invert, where basically a certain part of the economy is absolutely guaranteed to lose money. In this particular case, the financial services sector. And, given this image, the fact that we have our inverted warning from the good people at stockcharts.com, this is a fabulous tool. I always give them big shout outs. If we actually look at their sector rotation modeling, this is the first 2 weeks of the quarter as well. So where are we here? It'd actually be super cool one day when we get our act together. We should have these charts and all these studies on TRI site. So we look forward to that in the years ahead. But if we look at, say, the first quarter of the new year, and I've been talking to you guys about this quite a bit recently, so it shouldn't be anything new. But there is basically the first quarter. Let's see if I can just bring this in. There we go. You tell me, is the market putting money into financials? And this is where the rubber meets the road with all of these sort of economic models and theories and stuff. I mean, this is reality. The yield curve, what did I say about the financial services industry? Are they guaranteed to make money right now? See if there's anybody over on YouTube. I never watch these YouTube pages now. Let's see what we got here. Hey, look at that. We got some people over there. Go, 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 Rampage BB. Hopefully I wasn't too politically controversial today. Hello, Brian and beautiful TRI team. Mt. Gox started the refunding according to... Oh, interesting. So Mt. Gox is starting to release money? I'll be damned. Yeah, way to go.
Man, that has been a long time.
Yeah, no doubt, eh? Hey, you remember Thomas? Thomas used to always bitch and complain about when was he going to get his Mt. Gox
He had a bunch
money.
of money tied up in there, yeah.
Yeah, so anyway, wow, interesting. So I know there was another guy, Flibber. Do you remember, you were on TradingView back in the day, eh? When we first got going? I seem to remember you were part of that as well. Do you remember that guy, Flubber, whatever his name was?
Vaguely.
Yeah. Anyway, he had a pile of money in Gox. So
our running joke is I've got about a 2-month-long memory, so if it happened more than 2 months ago, kind of sort of remember it. So.
Okay. Actually, Grim's going to tell us about Top Step combines, and actually he's perked our interest. Chris and I are going to go and do the Forex funds combines and stuff. So actually, TRI is going to do a lot of prop trading in the near future. That's kind of interesting. So be sure to check in on the Afterparty show for that with Grim. Should be a good, lively conversation here shortly. All right, let's just see if there was any. It's always nice to hear from the Grim, aka the Wookiee. That's right, the Wookiee. And Josh says, so I can expect FTX money back in 8 years, if you're lucky. I have a funny feeling, and it's gone. Okay, back to the story. So the point here is, I just said a moment ago, you can see quite literally that there's a certain part of the economy that's guaranteed to lose money. The financial services industry, they will be lending out to the public. Think like insurance companies, mortgage companies, anything. And then they refinance constantly on the short end of the curve, right, to make sure that their balance sheet is basically a net zero liability. Which you might argue that the SVB people, they kind of let that slide a little bit. Took a couple chances, and I think that the cartel saw that they were vulnerable, and I think to a certain degree they felt like all of these regional banks fell into a massive trap that was laid by the cartel. So, the irony of it all is actually, if you listen to, and actually I was watching it even earlier today, it's a total side, but I was listening to Caitlin Long, and I swear,
Also,
if
everyone,
I was
the
20 years younger, I'd
Also,
have
everyone,
a major
the jobs
crush
report
on this
out this
lady.
morning showcasing a resilient
I
labor
don't know
market
where the
that
hell
isn't
she
slowing.
is, though. But I think it was on these shorts. I don't know how to do this, but I was so impressed with her, as I always am. She's so smart. And she was talking. Oh God, now I don't know how to do this. I really want to show you this because where is she? She's down in one of these things. These are these short things. Oh goodness. I don't think any of these ladies are bankers. I'm not sure why. It looks like maybe Google is thinking, Brian, we don't, we want to clickbait you. Anyway, when I was looking at this earlier today, and Caitlin had a short in here, and it was so perfectly articulated. It was just great, because as I said there a moment ago, Mr. Grant, of course, he would prefer that we don't do any of this reserve banking stuff. Anyway, I'm off on a tangent here. I should get back focused. Sorry about that. All right. So I guess my charts here didn't pick this up because I did see, there's the stock market's reaction from the jobs report. They were relatively happy. And I thought I saw, somebody posted this in the lounge. Mr. 1075, you know who you are. You are awesome. Bloomberg, one-day tick chart of the 2-year note. So you can see on that jobs report, the whole market launched itself higher, like the bonds. And of course, this 2-year note, this is like basically the market's based short-term interest rate proxy, but it's a bond, right? So it's like a government guaranteed issue. You can go and buy T-bills. They're usually only like 90 days, but you can buy longer dated. But this 2-year bond, this really actually is probably the best market-based proxy for the short-term interest rate market. You can also buy euros, but that's euro dollars, but that's like a corporate interest rate market. So anyway, you can see right on that jobs report, first thing out of the gate, huge jump up in yields. And then, of course, like I said, today's a holiday. So basically, they ramped the market up, and then they closed it down for the holiday. So I was saying there earlier, market fairly friendly number. The dashboard is telling us that we haven't broken down yet, and teal is still sloping up. So even if we did get a cross here, it would be a weak signal at best. Probably a legit signal, but weak nonetheless. And if anything, what I would prefer is let's have the market, maybe open up in the coming week or two, relatively firm, and let's get that teal up into the overbought zone, and then it sets up just a wicked short. So what might that look like? There's the daily chart. Ironically enough, this is everything that we teach in our education program. There was a gentleman who was asking about trade location tools in the level 1 program. And gee whiz, that's just about exactly everything that we teach, plus sort of institutional fingerprints. The bar that made the high plus the preceding bar, you can see where the sort of institution stopped the bull, turned it back to a bear. So we are there, and that is like level 1, out the butt. You could also make the argument horizontal support and resistance. Is this a big head and shoulders? And then things like we could probably do Foggenbaums off of the bottom heading up top here. And, into the original market structure top. We also have a gap that needed filling up here, so that's been done. So in a weird sort of way, it's probably not in anybody's best interest to try and predict the future. But, if we did some sort of crazy top that ended up looking something along those lines and we started to break down from here, it would make perfect sense. It's actually extremely cliche. So I don't think there's anything out of the ordinary going on here. And just be forewarned, we are coming into a very normal seasonal peaking time of year. They don't, the old cliches go, sell in May and walk away. My old buddy Don Valou, he would say, buy when it snows. So that would be sort of like back here. November, December, I suppose, we said that the Russian stock market bottomed there last fall. So, buy when it snows, and we're looking to sell when it goes up in here. Really, nothing really startling here. It's interesting. I'll just show you. It's kind of an interesting aside. I'm really interested in stocks like this Silver Wolf Exploration. This actually, it turns out that this is a perfect VCIM name. The only issue is that they never had to roll the stock back because there just wasn't that much stock out to begin with. But they did reorg the company back in here. They shuffled up the board of directors. They did shares for debt, which I love to see because that means that the company's getting rid of debt, which is never a good thing, in exchange for shares of the company, which is a very good sign of value. And then they also announced a big option grant to insiders right around 20 cents. And they've been cleaning up a nice silver property down in Mexico. Of course, Mexico and all that. But I've made great money in Mexican silver stocks in the past. One in particular. Actually, a guy that was involved in a blockchain company. I did a deal with him years and years and years ago about a Mexican silver company. So anyway, point here is beautiful bottom, and of course they're starting to drill. They're actually really cool video interview. So if you happen to play the junior mining market, I know a lot of you guys are gold and silver bugs. Maybe listen to that interview about Silver Wolf. And of course the chart speaks for itself. Trade location. I don't know whether we actually have bull divs coming in here or not. To a certain degree. Maybe a little bit through here. Willie did get stupid down here. Oh, Willie got stupid again. So, if W's come in here, then we know we're off to the races. So these are the kind of things that I'm super interested in right now. A little bit contrarian. That's not chasing the high flyers. That's not chasing tech stocks. Funny little mining stocks.
Hey, Brian.
Yep. What time is it?
Yep.
Already done half an hour. Jeez, I don't think I've even talked about anything. I suppose just we'll wind this up with a quick boo at crypto. We are heading into the weekend, and of course weekends are always fun in crypto. I don't know. I was sitting here last night. We're at one of these situations where, keep in mind, just remember this about crypto right now. This is now our third doji in a row here on the weekly price chart. I mean, this is just a hurry up and go nowhere market. I'm hearing a lot of social media influencers and stuff calling for like 35, 40,000 Bitcoin, which is a little scary. I don't like it when I start hearing the public getting rah bullish. I wouldn't be surprised if Bitcoin itself is just parked. I think that to all intents and purposes, I think Bitcoin has been securitized, which sucks. You hear me barking about how they securitized the housing market, and now, of course, it's like totally being manipulated. I get the impression.
What a great example of the first stop being super strong, right?
Yeah. Yeah, exactly. And this just happens to be this particular range. It is interesting, and I think I have it on here. Yeah. Here is the entire range is 38.2. So I don't know whether, that is up in that 35,000 area. So maybe we can get a push. If we continuation trade up here, then I think that happens. The only problem is just if you start getting into the business of saying that this will happen, then when it doesn't happen, you look like a total idiot. So do you really want to stake your whole sort of public reputation on this will happen, and then some Goldman Sachs guy comes out and totally shits on this space, or Joey Diamond or something, and then the market has to melt down, and I've been at this game so long, it's not worth making that prediction. Now you could say the statistical odds are highly in favor that we do work our way higher, and as Grim sort of pointed out, we are actually at a technically appropriate level. That if the market is rejected off of here, we would look back and go, well, I guess that's not really that big of a surprise. I still think that they're on a weekly basis. There is plenty of reasons for this thing to push higher. It's just somebody has said, thou shalt stop. And, on a lower time frame basis, if you fancy yourself a trader, but understand We had a situation right here where basically a crypto social media influencer, he basically lied to the public and got them all to freak out. And I've been working with this gentleman over the years. Well, not working with him, but I've definitely watched him in action in the marketplace. And just understand why I actually have, and it'd be curious whether you even know who this idiot is. I mean, there's not an accident that I have this picture in my Twitter heading, because I think that this is the absolute most perfect analogy of the cryptocurrency space, which is kind of sad, but it is brutal reality. So, you might, as I look at the chart and I see that price is compressing, this is basically what 3 weeks of doji looks like. And it's a lot of, excuse my French, I'm sorry, YouTube. It's a lot of FU moves and a lot of bullshit and a lot of manipulation. Remember, this is an unregulated space, so it's totally susceptible to manipulation. So as the coil continues, our third week of doji here, I don't know which way this is going to break, but I was posting this on the site that, well, if you're a bull, step up and place your bets. If you're a bear, step up and place your bets. If you're a bull, then I think you want to try and be long from about 28 and change, looking for 29.20, about $1,000 on a swing trade basis. And if you're a bear, you want to be short from about, what is that, 20, let's call it 28, 29, 27,950. And your target's down around 27 even. And I think that's probably what our weekend looks like. And you can see M top, let's get everybody bearish. And then, W bottom, all right, let's go bullish. And it's back and forth, back and forth, back and forth. And frankly speaking, I don't think anybody really knows which way this is going to break. It's, just if you step up and you say, I'm a bull, I'm going to buy a break above 28.10 and 28.100 and it works, you look like a genius. Way to go. I think probably the most important thing out of all of this is, regardless of which bet you take, whether you're a bull or you're a bear, if I take my bearish bet, then there's my risk and there's my potential reward. We want to make sure that the risk box is smaller than the reward box. I don't know whether that makes sense or not. And then conversely, if I'm a bull and I step in on the buy side and I buy this level and I'm going to risk down to the bottom there, this A, B, C, D, my risk box is much smaller than my reward box. That's the key to making money at this game over the long term, folks. Got to make sure your average winner is bigger than your average loser. I don't have a crystal ball. I have no idea who's going to win this battle, but there are your levels. So step right up and place your bets. Ride the Ferris wheel. One thing I would say that might sort of temper any sort of bearishness is I do see there are names like this Filecoin who are trying to break out here. Now, we don't quite have a full W on the other side of this trend line. Maybe I'm going to let this develop over a little while, but I'll tell you, this morning when I woke up and saw that, we're above all the moving averages. If I do go and buy this, front run this bot level, and we pop up here, then I got a bit of a cushion. If we move stop to scratch, I'll get out if we come back here, and that'll be my profit margin. If I do buy this, then I'll risk down to this low here, which means I'm letting all the moving averages, this low, this low, this low, these lows, all defend my trades. This thing would really have to crap out and really be a full-on bear for me to get stopped out on this. But as long as I see that they're bidding these things up, I don't know. I don't know whether I really want to be too bearish. There are other names that are really rocking and rolling. Unfortunately, I can't buy them after they've gone. This UOS, look at that thing go. So, you can start doing fog and bombs, and of course, W's within W's. And if this thing does go cranking up here, I don't know what the story is here. So, don't quote me on whether this thing's just a pump and dump, or whether it's actually the next best thing since sliced bread. But that's an uppy looking chart. So if these guys are going to make a bunch of money, they're probably going to have Bitcoins, and that'll probably be bullish of Bitcoin. Notice, look at this cute little W is trying to come in here. 200 estimate, probably going to slow that down a bit. But nonetheless, fair amount of red. But there is some interesting looking little green spots. Like I said, this Filecoin, that jumped out at me this morning. I'm going to be watching that thing over the next couple days. Also, too, I did see that Chico was out there on YouTube with a whole bunch of new... This is what I'm buying. I'm all bullish of this. I'm all bullish of that. So if he's out there touting stuff, then you're probably going to find there is some money coming into this space. I know he liked things like Link over the years, so keep your eyes on that. And then also, too, as sort of like a final thought, I did see that Ethereum did break out through previous highs here. I mean, this is kind of a mess here. We can just get rid of all that. But you know, higher highs and higher lows. I mean, I can't come in and buy that there. But we do know that there is a fundamental driver coming up here. Usually it's buy the rumor, then sell the news. Is this the buy the rumor event? I mean, I don't know exactly when that Shanghai catalyst is supposed to happen. But if I'm not mistaken, I think it's supposed to happen here somewhere in April. So there's another anecdote. And, you know, if and when this thing does top out, maybe it tops out there, I don't know. We're going to be thinking about things like 50% retracements. And then, you know, if I really did want to buy this thing, I would be drawing up my reload zones. And I'd be starting to ask, you know, where should I be, you know, Brian's favorite fib, notice, just so happens to be off of this double bottom level. So, you know, that trying, you know, if that's probably a good image. Put this market into context. We're certainly nowhere near the bottom anymore. There's a beautiful W that could have gotten you long. And we're coming into seasonally dangerous times of year. And I think that's probably the best way to finish this video. All right. So have yourselves a great day. PMA for the win. We've got the Wookster with us here. It should be a really fun conversation. So maybe consider popping on over and joining us for the Daily Brief After Party. If I don't talk to you in the interim, look forward to chatting with everybody on Sunday for the Broiler Chicken Show. All right. Other than that, have yourselves an awesome rest of your day. PMA for the win. All the best and bye.